welcome. This is all you need to know. I am Agam Akil. Let's start by taking a look at the global markets at this point in time. And there is some weakness that has been seen. In fact, when it comes to the American markets, as you can see, we're seeing considerable weakness of cuts of anywhere between 1.5% to 2%. Well, the cuts are not as deep for Europe that we saw yesterday, but they're close in the red all the same, and that's had a bearing on the Asian markets. As you can see, the Nikkei is down by as much as 2%. We're seeing Hang Seng also declining by around 0.6%. What does it mean for the SGX Nifty? At this point in time, it is indicating a negative opening of as much as 74 points. We did see a lot of weakness last Wednesday as well when it comes to our own markets, when the Nifty declined by around 1.3%. And we also saw the small and the mid-cap indices decline by as much as well over 2%. There were cuts in the banking indices as well, where the Nifty PSU banking index specifically stands out, considering cut around 3.5%. And of course, among some of the other sectors which also saw considerable weakness was the auto and the metal index. But when it comes to the ADRs at this point in time, the American depository receipts also have seen weakness, and Vedanta, ICICI Bank, Infosys all declining trade, save for Wipro, which is the only one which ended the day with marginal gains or when it comes to your exchanges abroad. But let's move on and take a look at some of the other variables, and we do have foreign institutional flows as well as DIIs. Well, there really wasn't much considering the gross numbers themselves were very small. So a lot of participation has come from the HNIs as well as your retail segment as far as your selling on Wednesday was concerned. Reliance Industries, Indiabulls, Housing Finance, all declining trade, but it was essentially broad-based, considering over 100 points decline was contributed by more than just 4 stocks. And that said, when it comes to the futures and options space, where there were a lot of longs which had unwound, a 1.5% cut in open interest for the Nifty futures, the Nifty banking futures saw a decline of as much as nearly 13% in open interest. And when it comes to some of your other factors, this is your open interest change, and as you can see here, it is essentially 10,500, 10,600, 10,700. All these calls have seen considerable amount of writing and some unwinding around the 10,400 and 500 puts. When it comes to open interest distribution, maximum open interest remains with the 11,000 call. On the lower end, it's a fight between 10,400 and 10,500, which could give you a range. But considering the fact that the SGX Nifty is currently indicating levels of around 10,300, this could change too. But the volatility index, that rose by around 3.5% to nearly 18. And the put call ratio, as one might expect, came off to a certain extent to around 1.21. The Nifty banking put call ratio considerably lower at 0.54. And among stocks, we are watching out for something like a Divan Housing Finance and Jet Airways, which are new in the band. On the other hand, IDBI Bank moves out of the band. We also have Bajaj Finance in focus, which did see a lot of shorts building in, considering a near 7% increase in open interest. And we also had something like an NIT Technologies, which reacted on earnings in advance, and we saw longs there. And finally, yet another counter which also saw declines was RBL Bank, which stood out essentially on the back of accumulation in open interest towards fresh shorts. So a lot of weakness out there. But with that, let's go across to Bloomberg's Haslinda Amin for the top international headlines.
President Trump is threatening severe consequences if it's proved that Saudi Arabia murdered critical writer Jamal Khashoggi in Turkey. For the first time, the president told reporters that, quote, it suddenly looks as if Khashoggi is dead. The kingdom has promised a swift but thorough investigation into what allegedly happened to the writer after he entered its consulate in Istanbul.
We're waiting for some investigations and waiting for the results. And we'll have them very soon, and I think we'll be making a statement, a very strong statement. But we're waiting for the results of about 3 different investigations.
Treasury Secretary Steven Mnuchin is the latest to pull out of Saudi Arabia's investment forum next week. His decision prompted Goldman Sachs to back out as well. The firm was the last of the big U.S. banks to drop the so-called Davos in the desert. However, top Russian finance and business figures are going to Riyadh. Bloomberg is no longer acting as media partner of the Saudi forum. UK Prime Minister Theresa May is gambling on a go-slow Brexit as she and the European Union try to bridge their differences. The summit in Brussels fell far short of the breakthrough it had been touted as, but there's hope that keeping the UK in EU rules for longer may unblock the impasse. May has to sell the idea to Eurosceptic Conservative colleagues. Top EU leaders say the ball is now in her court.
I didn't say there is no room to maneuver for any negotiation. I just say now the key element for a final deal is on the British side. Because the key element is a British political compromise.
Italian bonds plunged on Thursday as the EU's executive arm laid out its concerns about the populist government's spending plans. The yield on the 10-year note surged as much as 15 basis points, widening the spread over equivalent German debt to levels not seen since 2013. Stocks slumped and the euro also weakened as EU commissioners warned the draft budget is not acceptable. Global News 24 hours a day on air and at TikTok and Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Haslinda Amin. This is Bloomberg.
India derives only 10% of its GDP from exports. So the gain from a weaker rupee in terms of export revenues is much less than the pain from the weaker rupee in terms of higher import bills. So net, there is stress. And that stress is now showing in this chart. This is the equities chart. The blue line is the earnings estimates and the white line is the actual earnings. You know, across emerging markets, companies are on average meeting earnings estimates, but not in India. In India, even though there has been some improvement in the last couple of quarters, there is still a gap between estimates and actual earnings. That gap, that lingering gap, along with the stress that we are seeing in the economy, will force analysts to cut estimates in the days to come. So this sell-off may not be just a sentimental sell-off or a valuation sell-off, but a structural reflection of the stress in the economy.
Let's talk about the fundamentals, Srini, because, well, as strong as they are, you know, where are we with that? Does it mean that investors should reassess their perception of risk in India?
Yes, that's already happening here. We saw in the rupee how the currency is finding itself in the league of the crisis currencies. And in terms of stocks, we saw how companies are facing earnings downgrade risk. But now the pessimism is spreading to the bond market. Investors are bidding up credit default swaps for India at the greatest pace in the whole world, not in emerging markets, but the whole world. You know, the concern there is twofold. One, the fiscal strain will increase because of election year spending. And two, the higher oil prices and the weaker rupee will increase input costs. So if you put all of this together, you can plausibly argue that there is a fundamental re-rating of the country risk that's happening here, where investors are taking a step back and saying, hey, let's reassess the true risk of India, and then let's redo the math and come back.
Let's now get a check on the commodity space, starting off with oil prices, which have been under some bit of pressure in the last couple of days. And with that, WTI has in fact sank to its 1-month low on the back of US inventory data. So the US inventory in fact rose as much as 6.5 million barrels for last week, as per official government data that was released yesterday. Shifting focus to the base metal space, all of the main metals except for zinc declined in trade on the London Metal Exchange. Now this was largely on the back of Chinese demand, which concerned and dragged copper prices lower. As far as other base metals are concerned, we had lead, which closed lower for the 3rd straight day, and aluminium also closed lower for the 2nd straight day. Now, like I was mentioning, zinc was the only metal that gained in trade. That, in fact, closed higher for the third straight day. Lastly, talking about precious metal space, gold has been on an upward bias trajectory and, in fact, set for its longest weekly run of wins in the last 9 months.
Well, bulk of news that we're tracking this morning. Let's start off with Yes Bank, where the RBI has reaffirmed the order that the bank should go ahead and appoint successor to Rana Kapoor by Feb 1, 2019, thereby denying the kind of timeline that the MD and the CEO was seeking. Second in the list, we have Tata Group, which is in talks to acquire a majority of stake in Jet Airways. Now, that's a PTI report, and Tata Sons is expected to pick up 26% stake in Jet Airways and another 26% stake by open offer. Third in the list, we are tracking in a couple of bull deals out there. La Opala, where a number of shares, I'm going to start off actually with La Opala, where a number of mutual funds have sold in their stake, and also at the same time you have some buyers at that point of time. EPG Capital, LTR Focus and Steadview Capital, they have sold in around 4.3% equity in this counter. And on the buying side, you have UTI Mutual Fund, DSP BlackRock, which is bought in cumulatively more than 3.5% stake. Also, we're tracking in a DHFL, where you have a bull deal which took place, where the pension, where you had the pension mutual fund which bought in this company. Also, we're tracking in a couple of results this morning, where I'm going to start off with a Mindtree. The numbers were pretty much in line with estimates, and if you look at the revenue growth, that was a 7% uptick there. Net profitability too saw a 30% jump out there. Operational front too, it was in line with estimates. EBIT saw an uptick of nearly 22%, while the margins for these companies rose as much as 13% as compared to 11.5% that we saw previously. Cyient also reported steady set of numbers out there. It was the other income mainly which aided the bottom line performance of the company. Revenue 9.9% uptick sequentially, 54% jump on the bottom line front. If you look at the EBIT performance, that a 30% growth out there to a number of 123, and you have the margins which stood at around 10.4% as compared to nearly 8.8%. Also in our list, we are tracking Havells India, where fairly decent set of numbers in line with estimates. However, the margins saw a bit of miss. We're going to be talking about it. Revenue 24% uptick there. We're looking at net profitability, which is higher by more than 5%, and the EBIT of the company, which has risen as much as 2%, but pretty much in line with estimates. If you look at the margins performance of the company, that's a little miss out there, mainly on account at 12% as compared to 14.5%. The contraction is mainly on account of dip that we've seen in cable business. Also, we're tracking in ACC numbers. Now, we're looking at a disappointing set of numbers, at least on the operational front, and that's mainly on account of the disappointment creeping in on the realization. Revenue at 10% uptick, YOY basis standalone numbers. Operating income has seen a 10.2% uptick there, and net profitability for the company has risen as much as 16%. Well, in terms of the margins of the company, they've come in at 13% as compared to 13.3%, a slight contraction or flattish kind of trend that we'd see, mainly on account of disappointing realization. Last in our list, DCB Bank, where we're looking at mixed set of numbers. NII for this company's, for the bank, has actually slid by as much as 19% to a number of around 282 crore. If you look at the net profitability, that's up as much as 25% on account of a lower provisioning. But then if you look at the asset quality of the company on sequential basis, that's actually improved. And if you look at the number, that's come down to 1.84% as compared to 1.86% that we've seen in the previous quarter.
So Reliance Industries, by spending less than 10% of its cash reserves, will be acquiring majority stake into cable and broadband service providers. So it will be taking close to 51.3% stake in Hathway Cable for 2,940 crore rupees by subscribing for new shares, while in Dead Networks it will acquire close to 66% stake for close to 2,290 crore rupees by acquiring stake from promoters and by subscribing to new shares. Now, because of these two acquisitions, the company will also have to make open offer to 4 companies, that is is Den Networks, Hathway Cable, GTPL Hathway and Hathway Bhavani. Now in GTPL Hathway, Hathway Cable owns nearly 37% stake, while in Hathway Bhavani, Hathway Cable owns nearly 51% stake, and that is the reason why it is making an open offer for GTPL Hathway and for Hathway Bhavani. Now what does this acquisition mean for Reliance Industries? Well, it will accelerate Jio's entry in the cable and the home broadband space. Now that is a new business segment in which Reliance Industries has just entered. So with this acquisition, the company will get nearly 1.4 crore cable users, that is what Hathway and Den Networks have, and close to 8 to 9 lakhs broadband subscribers, that is what the Hathway and Den Networks currently have with them. Now this acquisition would also solve the last mile connectivity issue, which is one of the biggest hurdle when it comes to cable and the home broadband space, and it will also give Reliance Industries a ready distribution network of close to 27,000 local cable operators. So this is the two important things that Reliance Industries will be getting from this deal. Now if you see whom this deal impact the most, well, it will impact the existing DTH and also the broadband operators. Now if you see in the DTH space, the subscriber base for the DTH space has been growing at a continuous pace, and there are only 5 operators in this space, and the top 3 control nearly 88% of the market share, which is Dish TV, Tata Sky and Airtel. So they will be seeing some impact of this acquisition that Reliance Industries has done. Now on the broadband space, if you see, the subscriber growth has been a bit sluggish. In fact, the subscriber growth has fallen compared to last 15 months, and if you see, there are major 5 players in this, and the top 3 players, that is BSNL, Airtel and Atria Convergence Technologies, that is control nearly close to 80% of the market share. Now on the company also released its earnings, and if you see the earnings for Reliance Industries and Reliance Jio, both were largely in line. The standalone earnings were benefited by the petchem business, which was benefited because of higher demand, while the refining business remains subdued due to the planned shutdown that we had seen in the second quarter of financial year 2019. Now the refining business of Reliance Industries has remained subdued for the last 5 consecutive quarters. Now if you see the EBIT margins of the refining business, now they have continuously declined. But in the second quarter, it has declined at a slower rate at around only 17 basis points. Now because of this planned shutdown, the company's gross refining margins were also impacted despite a stable benchmark, that is the Singapore gross refining margin. Now the Singapore gross refining margin remained stable at around $6.1 per barrel, and Reliance Industries premium to the Singapore gross refining margin, now that came in at a 10-month low of around $3.4 per barrel in the second quarter of financial year 2019. However, on the positive side, the retail business stood out again for Reliance Industries. Now if you see the retail business EBIT, now it has increased more than 250% for the 3rd consecutive quarter, and in the second quarter it grew nearly 272% compared to last year. Now if you see the telecom business, the telecom business was purely added by subscriber addition that the company had seen. Now in the second quarter, the company added nearly 3.7 crore subscribers, which is the highest ever addition that the company has done, highest ever quarterly addition that the company has done so far, but this has come at the cost of ARPU. Now if you see the company's average revenue per user, it has been continuously declining. It has come down from 156 rupees in the last quarter to close to 132 rupees as of second quarter of financial year 2019. Now if you see the company's capital expenditure, now that has again remained at an elevated level in the second quarter. The capital expenditure for the second quarter was close to 16,000 crore rupees, and for the first half of financial year 2019 it was close to 33,000 crore rupees. Now some key other factors for Jio's earning were the fact that its total debt has come down to 84,000 crore rupees from 92,000. The churn rate has increased to 0.66% from 0.3%. However, this rate of 0.66% is still way below the industry rate. Lastly, its data consumption of that has marginally increased to 11 GB per user per month from 10.6 GB per user per month reported by the company in the last quarter. If you see now the brokerages, now they have also largely maintained their stance on the company. Most of the brokerages have maintained their stance because the earnings were pretty much in line with what the analysts were expecting. And on this deal with Hathway and Den Networks, the companies are saying that they'll have to wait for more clarity on how they're structuring this deal and how they're going to brand these 2 products. So they're waiting for more clarity on this.
Well, we're not expecting a good set of numbers coming in from UltraTech Cement. Clearly, the company is expected to, report subdued set of numbers. If you look at the top line growth, we're looking at a 20% uptick there. EBITDA, however, the company is expected to be flattish. In fact, down by as much as 2%. Margins are expected to be at 17% as compared to 21%, a contraction out there. And if you look at the profitability, not a great number. Again, a flattish trend. In terms of the other parameters, volumes is seen as much as 22% higher to a number of 16 million ton. And if you look at the EBITDA per ton performance, we're looking at a sharp 19% downtick there. Realization again for this company are expected to be flattish, somewhat the kind of trend that we've already seen in ACC. What goes behind the making of UltraTech numbers? Volumes are expected to rise on account of the acquired cement plants of JP Group. Top line is mainly driven on account of that. However, realization are expected to remain subdued, although the cost pressure continue to rise. We're seeing realization muted trend on account of the price hike, which is going to be offset. The price hike which is seen in central region, which is going to be offset by the negative prices we've seen in north and south. Higher energy and freight costs are expected to weigh down on the operational performance of the company. Key factors that we like to keep an eye out, apart from the volume growth, will be the pricing trend, sustainability, and the cost input pressures. Apart from that, we'd also like to watch out for the capacity utilization levels of the newly acquired JP assets.
Time to look at some of the stocks to watch this Friday morning based on the market action of Wednesday. The first stock on the list is Edelweiss, which was down nearly 10% in trade and saw delivery selling in excess of 100 crores. The delivery volume more than doubled for itself when compared to the 5-day average, and the total volume surged about 80% as compared to its 5-day average. Second stock to watch out for, that will be L&T Finance, which is again down about 8.5% and saw delivery selling of nearly 90 crores. The delivery volume almost doubled for itself as compared to the 5-day average, while the total volume surged just about 50% as compared to the 5-day average. Last and final stock, Piramal Enterprises, which was down about 10% in trade and saw delivery selling of 137 crores. The delivery volume surged about 90%, while the total volume surged just about 87% as compared to its 5-day average.
All right, it's going to be a busy day today, lots to talk about, and you'll find all the action right here on Bloomberg Quint Live, including all the live market action. There are also several stories on the website that you should consider reading. Here are just a couple of them. While the US Treasury stopped short of labeling China a currency manipulator in its latest semi-annual report, the department's sharpened language didn't escape the foreign exchange market's notice. In a break from recent releases, the US Treasury devoted a section to outlining concerns over China's bilateral trade surplus and said that the US was deeply disappointed that the Asian nation doesn't disclose its foreign exchange interventions. And Delhi's Patiala court yesterday took cognizance of former Union Minister M.J. Akbar's criminal defamation complaint against journalist Priya Ramani, who has accused him of sexual misconduct. It has fixed the date for recording his statement on the 31st of October. Well, that's all you need to know going into trade today. Up next is Indian Open, and it promises to be a very interesting one, so do stay tuned. This is Bloomberg Quint.